When you look at what's happened over the last couple of years in the breakdown of the bond market, representing maybe the worst bond market in history over the last 2.5 years, down about 50%, I think we are beginning to see the world, at least the big money, discovered gold as being the preferred safe haven store of value. And I think there's no coincidence in this that we've seen the worst year ever for treasuries coinciding with the highest central bank purchases ever. In fact, last year we talked about how the central banks bought more gold than ever. And this year, so far this year, they've bought over 800 tons. That's up 14% year over year. From last year, their trend is accelerating.
Popular financial commentator and precious metals analyst Andy Schectman has raised alarm about the newest tactic by banks in the United States to discourage depositors from investing in precious metals like gold and silver. Andy, the president of Minnesota-based bullion dealer Miles Franklin Precious Metals, says his company was recently contacted by a bank, presumably to confirm if the firm is really a certified bullion dealer on behalf of one of their customers that wanted to make some significant purchases from Miles Franklin. To an onlooker, this sounds like a harmless good deed by a bank showing genuine concerns for the safety of their customers' resources. However, Andy warns that it is only the beginning of a nasty can of worms that is about to swiftly descend on people who still have large deposits in banks. According to the Miles Franklin president, banks are not just issuing fraud alerts when depositors try to make wire transfers to bullion dealers. They are also outrightly asking customers if they are certain that investing in precious metals is the safe thing to do at the moment. That is nothing short of manipulative behavior from the members of an industry well known globally for doing just about anything to achieve its goals. Andy believes there is an impending liquidity crisis on the horizon. Banks know this because their deposits have been getting clobbered, which is why they are doing everything to reduce all outflows. They will manipulate, gaslight, and do just about every other thing to keep your money. Andy also warns that as the banking crisis worsens, and practically everyone is saying it will, these banks are going to get even more desperate to avoid large outflows, which could cause bank runs. That is why the renowned analyst is warning that the right time to get your money out of the banks is right now. Even tomorrow might be too late because the entire industry is sitting on a keg of gunpowder. Just one bad news and everything could go up in smoke. We will now bring you clips from Andy's recent interview with Liberty and Finance. Please watch, share, and like this video as Andy discusses what's happening in the banking sector and how you can use precious metals and other assets to protect your wealth. Also, ensure you subscribe to the channel and turn on the notifications so you get instantly notified when we upload a video. Thanks and enjoy.
I think one of the fallacies that needs to be discussed, and I'm glad you brought it up, is the liquidity of, or the perception of liquidity. We were blessed with the privilege of doing 2 orders last year, both of them north of $50 million. And the first one we did, if you recall, the client wanted us to tell the world about it, which was something that's atypical in this industry that is dominated by privacy. It took her over 4 days to get her money released from a bank and had to employ threatening and bringing in the regulators to have that money released. Now, that's not your typical situation, but certainly when you're rolling over an IRA, as an example, could take a week or 2 weeks or longer. And there's no rule about this, but I guess I could say, speaking in general terms, the custodians are very methodical, let's say, in releasing those funds. Can be a lot longer than people would like. And certainly when you talk about selling equities, I think it used to be T+3, and if I'm not mistaken, it's T+2 now, I think. T being the trade day plus 2 days. So you're looking at 3 days before the funds are in your account, certainly. So yeah, one of the things to think about is that, this is the whole reason about being prepared. Some of the things that you mentioned, people are waking up to things like bail-ins, or waking up to the fragility of the market or the system. And while that's great, I would argue that they have woken up perhaps a good 15, 20 minutes before their peers, the masses. And when their alarm clock goes off, you're too late. There's not enough metal out there. It would just become too clogged and cloudy, and it would end up ruining everything you're trying to do. So yeah, absolutely. When people ask me, let me just say it this way. And it's really a good point. It's worth talking about. When people say to me, I have $100,000, would I be better off buying it all at once or cost averaging? My typical go-to was cost averaging smooths out the uncertainty of play. And over the years, it would have been a good strategy in this very much up and down volatile market. Really, over the years, we've seen all sorts of markets, low, high, and everything in between. But I guess you have to ask yourself, how close are we to that moment where there is an event like a bank bail-in or something else that would trigger a mass awakening? So yeah, I think now more than ever, it's really imperative if you've made that decision to be swift about it. And I'm not trying to say that to hurry people into the turnstile. I'm just simply saying, and again, I'm the little boy who cried wolf. I'm on the new version of the little boy who cried wolf. I'm there waving. I am the one who believes this. I am the one who believes we're living on borrowed time. At least get your core position in order now before you have the luxury of cost averaging and taking your time and doing things. Until then, I think you're really putting yourself potentially in a compromising position, because one of these days, the commercial banks and the COMEX will be long and will just run with the price, and they won't short the rising price and screw the managed money like they've done over and over and over and over again for many years. One of these days, the price will just go. And that will coincide with probably mass adoption by the public, realizing that there's nowhere left to hide. That's why it's so important to realize that as we get closer to these events, you're going to find it harder and harder and harder to find liquidity.
Andy describes this little remaining time before the crisis as a tipping point, the very last moments before everything crumbles and the economy is shredded into nothing. He gives the example of continuous central bank gold accumulation. The apex banks started really buying gold and silver in 2022, and they've shown no signs of slowing down. In fact, the trend is rapidly accelerating. Central banks are buying more gold and at the same time dumping U.S. Treasuries, which was formerly their preferred reserve asset. Treasury yields are up and will need to climb even higher as the Treasury Department looks to issue another trillions of dollars in bonds in coming months. Central banks are taking shelter in gold. According to Andy, this is a huge indication that we are at a tipping point and everything is about to boil over. Let's get back to the interview.
When you look at what's happened over the last couple of years in the breakdown of the bond market, representing maybe the worst bond market in history over the last 2.5 years, down about 50%, I think we are beginning to see the world, at least the big money, discovered gold as being the preferred safe haven store of value. And I think there's no coincidence in this that we've seen the worst year ever for treasuries coinciding with the highest central bank purchases ever. In fact, last year we talked about how the central banks bought more gold than ever. And this year, so far this year, they've bought over 800 tons. That's up 14% year over year from last year. Their trend is accelerating. A couple more things to chat about, and that would be Schectman Capital is a company that published something, but I've talked about this ad nauseum, and that is they just came out and said, hey, we just crossed 130% debt to GDP, and they say 98% of the countries, I would say 100% of the countries where sovereign debt hits 130% debt to GDP, they've all defaulted on their debt. It's between 98 and 100%. You cross 130, whether it be through outright inflation or outright default, it's a bad thing that we have crossed this bridge, and they continue to accelerate the deficits, and the spending is out of control. Not a good thing. And I think the rest of the world sees this. You don't see 98% very often in anything in finance, and this is something people need to pay attention to. And then I'll just wrap it up by simply saying, look, when you put all this together, I see debt growing at a accelerating pace, and I see foreigners dumping our treasuries. They don't want them anymore. And I think treasuries will very soon no longer be the go-to store of value. I think it's moving to precious metals. And I think you're seeing this from the top on down, from the big central banks, and there will be a realization by the public that this is something that has already been in place now for a few years, using the suppression of the market to run cover for it. We talked ad nauseum about the central bank purchases, which are accelerating. So don't get on the wrong side of that. Only one thing to mention that I've seen in terms of BRICS, this week, and that is there was a grand opening ceremony for the Yuan Clearing Bank in Pakistan. They're going all around the world and using mutual cooperation and inclusion to build infrastructure. And you're seeing it everywhere you turn, whether it's in the Middle East, whether it's in South America or in Africa. And this is a trend that is also accelerating, as is the settling in local currencies until they come to a mutual conclusion for a settlement currency in the BRICS nations. So not a lot of good news to report. And I think it just adds credence to why people should think about being a contrarian, de-dollarizing, and looking at gold and silver as wealth, not as an investment.
What are your thoughts on Andy's interview and his overall outlook on the United States economy and the impending liquidity crisis? Do you agree that central banks buying more gold and dumping treasuries is a sign of a huge crisis? How are you preparing for such an event? Please drop your comments in the comments section below. Also, ensure you like this video, subscribe to the channel, and check out our other videos on gold, silver, and other metals and commodities. Thanks for watching.